G'day fools, Scott Phillips here from the Motley Fool. We are launching this morning the second in our Investor 5-Day Challenges. In fact, hashtag Investor 5-Day Challenge. Here's the thing, we all check our brokerage accounts way too frequently. Reckon it doesn't hurt? Well, if you're thinking about share prices, share price charts, ticker codes, 1 cent here, 2 cents there, 0.5% here, 0.5% there, you're not thinking about the business, are you? You're not thinking about the investing. You're not thinking about the long term. You're thinking about the seconds ticking away. Tick, tick, tick. They do not matter. I firmly believe the less you check your brokerage account, the more likely you are to be a more successful investor, because you're going to spend your time thinking about the company, not the stock code. You're going to spend more time thinking about the business, not the share price moves. Let's face it, some of the best businesses on the planet are going to be great for 1, 3, 5, 10, 20 years. What's 1 day or 5 in that time horizon? It's nothing. It's not much. In fact, the businesses are going to do what they do, regardless of whether the share price moves up or down or sideways for 6 trading hours, for 30 trading hours across 5 days, and yet we sit glued to our screens as if it matters. Now, I went away for 3 weeks a couple of weeks ago. I maybe checked my brokerage account twice. You know what happened? Nothing. Absolutely nothing, except that I had a clearer head. I wasn't stressed about share price. I wasn't thinking about share price. I wasn't trying to work out whether I was making or losing 0.5% or 0.25% or 1% in a given day. In fact, if you look back over the history of share prices, for most companies, the up days and the down days, I did this work a little while ago for a company I own called Corporate Travel Management. Something like, and I might be slightly off here, but something like 52% of the days were up, 48% of the days were down. Yet the shares had done extraordinarily well. They're up something like tenfold over a 6 or 7 year period. And yet, as I said, all but 2 percentage points of those days were basically ups or downs, giving here, taking there. It didn't matter. It was completely irrelevant. Unless you're a day trader, if you are, you have my sympathies, because I don't know how you do it. I've certainly not been able to see it done well and replicatably. That's not a word, but it is now. Investing is long-term, fools. It is all about the extended periods of time, the 1, 3, 5, 10-year time periods. Now, I'm not saying don't check your shares for 10 years. I'm not saying don't even check them for a month. I'm saying give it 5 days. Join the Investor 5-Day Challenge this week. Starts this morning, Monday. Finishes after the market closes on Friday. I just don't reckon it's that important. Now, if you've got a day trading strategy, then I'm not trying to blow that up. And if you need to look, because that's what you're trying to do, well, good luck to you. But if you're an investor, a capital I investor, which, as the Motley Fool co-founder David Gardner says, long-term investing should be a tautology. All investing should be long-term. And if that's true, what are the odds that Monday or Tuesday or Wednesday or Thursday or Friday share price movements are going to be even slightly impactful, even minusculely impactful on your long-term investing returns? Pick your favorite company, Apple, Tesla, Woolworths, Afterpay, any of them. Go back 1, 3, 5 years. Go to now, and then say, which days was it really, really important to watch the market? Guess what? 0, none of them at all. Not saying the share price wasn't volatile. What I'm saying is the long term owed nothing to those short term movements. Now, if you own terrible companies, well, I guess you want to watch them because maybe they go badly. If you own companies that you fully believe will be better businesses in the fullness of time, measured in years, let them do their thing. I'm not jumping on the phone and asking Warren Buffett every 5 minutes what he's up to, what he's just invested in. And yes, I own shares in Berkshire Hathaway. I'm not calling the CEOs of BHP or Woolworths or CSL or Wesfarmers or pick your company. I'm not asking them every 3 minutes what they do, every second. Imagine calling the CEO as often as you refresh your brokerage account. It'd be crazy, right? And yet that's what we do. We refresh the accounts as if the market's got something to tell us. You know what the market tells you in the short term? It tells you what it's thinking. Well, you know what? Sometimes they're questions you don't want to ask. Do you really want to know what the market's thinking every couple of seconds, every couple of minutes, every couple of hours? It drives you nuts. So here's the thing. Buy quality businesses. Buy a diversified portfolio of them. Buy businesses you believe in, whose futures you think are bright. And let them do their thing. Don't get tempted to buy or sell just because you're checking the share price. Don't be tempted to be happy or sad because the market's saying today it's in a good mood or a bad mood. Imagine calling your neighbour saying, mate, how are you feeling? You happy? Oh, good, I'm happy too then. You unhappy? Oh, I'm miserable then. It's crazy. And yet we do that every single trading day. We ask the market how we should feel. Madness. So here's the thing. Take the Investor 5-Day Challenge. Please give it a go this week. Commit to not checking your portfolio. Think about businesses, for sure. Think about companies. Wonder what businesses you should buy shares in. Think about the companies you interact with. Think about the businesses that are changing the world, doing good things. But don't check the share prices. It's just going to distract you from the main game. And that is being an investor. Buying businesses, diversifying, holding them for the long term, and letting those businesses earn their place in your portfolio by delivering great business financial results over 6 months, 12 months, 1 year, 3 years, 5 years, 10 years. That is investing. So take the Investor 5-Day Challenge. Go on, I dare you. Let us know. Are you in? Hope you are. Have a good week. I'll see you on Friday.